consumers and corporates, they trust their bank. There's interest in adopting stablecoin and tokenized deposits, but they want it coming through their financial institution. This is a very generational moment in terms of the potential the technology can unlock. As more stuff gets put on chain and tokenized, you're going to see efficiencies accrue, new business models created. You may see commercial lending or syndicated lending change in form in terms of how it's ultimately delivered and taken to permanent markets. The true market success here for Project Keystone and this technology in general is going to be us getting to a ubiquitous asset in terms of a tokenized deposit, and one that our customer delights in terms of a client experience. They don't know about it, they don't feel it, it just happens.
Jon, it's great to be with you.
Great to be here as well.
I know you've had a very busy week here at Emerald. One of the biggest announcements is something that you've been working on for a long time. I want to get the facts straight. You're teaming up with a number of banks. You're launching a bank-owned, bank-governed network for digital money built on regulated deposits. Give me a good analogy of what that means in practice.
Absolutely. You're right. We have been working on this for quite some time here at FIS. This is about enabling banks to stay at the center of the financial ecosystem and giving them, frankly, the technology to be able to be relevant as we make this transition from, as the crypto and stablecoin folks call it, TradFi, into the next gen of financial technology. This is a very generational moment in the sense of I equate it to, for consumers, it's like the shift to a mobile phone from landlines in terms of the potential the technology can unlock.
So help me also understand which problems you're trying to solve for your clients, maybe for yourselves, and ultimately for the consumer, how their experience might change down the line.
Absolutely. So for years, we've been talking about money moving faster. What this technology allows in Lyric and the network specifically is not only for money to move faster and settle far more efficiently than any other rail out there today, but it enables it to be smarter. So with blockchain technology, you're introducing the notion of programmability, and that is what's going to unlock, I think, a lot of value for consumers and corporates alike as we start to tap into its potential. And it's going to help banks do a lot of things they do today, just better, more efficiently, more liquidity, efficiency, better reconciliation and data on the back end, as well as open up new use cases that, frankly, we don't even understand yet.
So one of the other key, I think, terms here is that this is built also on regulated deposits. I feel like this is a pretty important emphasis that you're making. Share why that is.
There's a big, obvious debate happening. We had the Genius Act, about a year ago get passed. We're working through the Clarity Act, and at its core, what the industry does have clarity on right now is the benefits of a tokenized deposit versus a stable coin to banks. So I would say the defining difference between the two is when a stable coin is issued or minted, that's going to be deposits leaving banks and going off into U.S. Treasuries and bank deposits somewhere, depending on who the custodian is. Versus tokenized deposits, it's a great way for banks to be able to harness the benefits of the technology and serve their clients and their clients better, but keep those deposits at the bank and allow them to do what deposits do best, which is lend them out and help power the economy.
Yeah, we'll get into a little bit of the regulatory backdrop because it's, I think, an important factor in all of this. Something that I was thinking about before we sat down is kind of where we are on the timeline of development. And if you were to look at that timeline laid out, where are we in the moment between where we were, even with development of, I know ACH was a long, long time ago,
yeah,
but to where you think the future is going?
I mean, ACH, it's a rail that's been around for a long, long time. And there was a moment in time where there was inflection caused by the U.S. government and said, hey, we're going to make Social Security payments this way going forward. I think where we are with tokenized deposits and stablecoin, if you look at it as a share of global assets or money movement, It's still relatively small, but it's growing quickly every day. More and more assets are being tokenized because of the benefits of tokenization. With banks, I would say it's a broad spectrum. As we're having obviously a lot of conversations with banks, some get it and frankly pressuring us, can you move faster, faster, faster? We need this. Others are saying, hey, my board is telling me we need to do something here. What should we be doing and why do we have to do it now? Do we have to do it now? So looking for guidance. So it's a clear signal to me that we're in the early days of this, but if you just look at the velocity over the past year of how this conversation has accelerated, I think it's pretty clear that it's going to continue to ramp here.
I think something that's fascinating, maybe only to me, maybe to you as well, your title as Global Head of Money Movement and Embedded Finance. I mean, some companies separate those roles, no?
They do.
So what does your title represent in terms of the needs right now?
So even my time within banking, I spent a lot of my time focused on just the intersection of software and financial services. And we've been seeing that play out for the past 10 years. And frankly, I think it's part of it is my unique background and how I landed here with the remit. But at the end of the day, those things are very much linked if you think about how, as an end consumer, we consume financial services or a corporate. I mean, the old Uber analogy, you don't think about the payment experience when you're hailing an Uber. It's behind the scenes and very natural and easy thing to do as a consumer. And so that makes money movement and embedded finance travel well together.
I'm asking about this because, one of the core reasons that I think this is coming together in FIS's sort of perspective is that you believe that banks are the cornerstone of trust and that they should define how digital money evolves. I guess I just want to ask, why should banks really define how digital money evolves? What is the argument?
Yeah, I think, look, the consumers and corporates, they trust their bank. And I think what our research showed is there's interest in adopting stablecoin and tokenized deposits, but they want it coming through their financial institution. It's a technology problem, and frankly, that makes us well positioned and suited to help them. I mean, trust, it takes a long time to earn, and I think people have to remember banks are the incumbent here.
I want to get deeper into what it took to get to this point, to build. What were some of the hardest problems to solve before this launch? What's still left? I'm sure there's still a lot.
Yes, there's an enormous amount of work to be done. I have to remind myself, my team, and everybody involved, despite everything that it took to get here, we're in the very early innings still. But how we got to this model is, frankly, it's a function of the regulatory environment. It's also a scale issue. So you have some of the largest banks in the world, they already have their technology, and it makes sense for them to have their own technology because they inherently, given their size and scale, they have a network, and so they can harness the benefits of tokenization and tokenized deposits just within their own four walls. The challenge for the vast majority of banks, so everybody else outside of those top banks, is it's expensive technology to build. It requires a network effect, so you have to have not only ubiquity in terms of the currency, but also enough participants in the network for it to make sense. And so as we stepped back and looked at it and said, oh wow, we have this great technology in terms of Lyric, but I can't really solve the industry problem if I'm going bank to bank to distribute it because a tokenized deposit within their own four walls does nothing for them and their customers. And so that's what led us to this, okay, how do we combine with the banks, build this network effect where it's powered by our technology?
And just fundamentally, what is the purpose of the tokenized deposit? There's stable coins out there. I mean, there's so many different ways that folks are trying to solve the problem of money movement.
Yep.
So can you share with me how you see all of these playing a role in the full stack and the holistic picture?
Yeah, absolutely. It's not an either or choice. These tokenized deposits and stable coins will coexist in the future. I think there's a place for both of them. I think, frankly, what we're seeing right now is some clear bifurcation between a lot of consumer use cases are more stablecoin focused. It's becoming clearer and clearer to us by the day as we're digging deeper into use cases, conversations with banks, that the tokenized deposit use case has clear benefits in terms of settlement efficiency, but a lot of the commercial banking, applications. And then just tokenization in general, it unlocks a lot of efficiencies for institutions. And so you hear examples like in the wealth space where able to tokenize money market funds, and because of all the back office efficiencies that they're able to gain, they're able to open up the aperture, lower the buy-in rate, and expose their product to more consumers than they were able to previously because of the efficiency gains.
So there's at some point going to be a convergence on the consumer side, but for now it seems like the stablecoin is more of a consumer-facing identity for financial products.
It is, yeah. And look, we know as part of Project Keystone that our initial focus is domestic, and we want to remain relentlessly focused in the beginning to get the network established here domestically. We get a lot of questions around use cases to follow. Cross-border is an obvious one. There's a lot of energy behind it, and there's a couple different ways to attack that. It's having interoperability with a lot of the public chains that are out there that have strength in certain corridors, as well as interoperability with a lot of the existing banks that have strength in different corridors. So that's why I always come back to, it's not going to ever be an or, it's going to be an and type of conversation.
So when you have like a Circle and PayPal with stable coins pegged to the dollar, and the difference here with sending tokenized deposit through Project Keystone, they're really super different use cases.
Exactly. I think over time we will see more clear bifurcation of what's used where and when based on the use case. And the true test of success, I think, in any network is ubiquity with an awesome client experience. And I think an awesome client experience is they don't know how value is traveling. They just know it's getting there on time, efficiently, and transparently.
What is the pitch?
We have 6 banks to start, and we will likely in the coming months have a few more come on board. The pitch is really simple. We wanted to start with a hyper-pragmatic use case, which is just around interbank settlement. The reason we did that is because we know anybody that participates will get value out of participating. So trying to deliver business value immediately to the participants, to banks, that allows then the collective to establish a foundation that we can then iterate and build on, solve more use cases.
You have thousands of clients.
Correct.
So when you're going out on the road, what is your pitch to get more to sign on, especially in this earliest stage? What is the advantage of being here versus coming on later?
The early adopters or participants, we're really clear on where our starting point is and where our focus is. From there, I mean, we've mapped out over 44 different use cases. It literally grows by the day. Just in conversations here with banks, a couple more have been added to the list. We're not going to be able to tackle all of it right away, and we want to be really focused in terms of what value we unlock for clients next. The opportunity to get on early is to influence that.
They have a stronger hand in this. So more mechanically, the role that FIS plays across all of this, how would you describe that? Why is FIS really the right platform, the right organization to be building this?
Yeah, great question. So if you look at who we are as a company, making sure our banks are supplied with technology that keeps them relevant, strategically important in the financial ecosystem, that's of very high interest to FIS because they are our core client. We've amassed quite a set of assets that we believe over time will be quite complementary to Project Keystone in helping unlock different use cases. And then, as you mentioned earlier, we have thousands of clients here in the US that we already have a relationship with. And I think there's no better partner for Project Keystone than FIS to be able to expand the market endpoints.
Is there a version of this where, because the banks sort of own the network and FIS runs it, where the banks are now sophisticated that they don't maybe need you anymore?
I think that is, at the core of it, it's our technology powering it.
So no.
I don't think so. We're also an owner, or will be an owner of the network as well. And so I think it's a highly symbiotic relationship, I think, that we're forging together.
And when you look at this group of banks specifically, what do they bring to the table? If you were to look at each of the players, How do they help you form this early version?
We bring technology, they bring the volume to be able to not only establish the network, but also get transactions flowing through it. We're studying the banks that are participating pretty deeply because they all have their own nuances of where strategically they're focused, their business model, et cetera. A lot of that nuance is what's feeding into our use case development as we think about prioritization of what comes next.
It seems like you are focused on more of the mid and smaller regional banks, and that feels like a very, very core sort of mission for FIS.
Yeah, the way I would think about it in terms of the need in the industry, there's only a handful of banks that have their own proprietary technology, and there's, I think, last count, 4,500 banks, in the country. And so we think what it is we're building with the banks is going to be a great fit to provide a lot of utility for banks of all size.
I know you don't want to pick on any one of them specifically, but I was very curious at the mix and also the fact that being bank governed in practice, what does that look like? Is there a formal board? Are there voting rights? How do you prevent larger institutions from having more of an influence on smaller ones?
We've been pretty deliberate in terms of who we engage. If you look at the lists that we've publicly shared, I would say they have more in common with each other than the top five financial institutions. And I think that creates some efficiency in focus and prioritization. As far as a governance model, this is being structured as a for-profit entity. And so governance is going to be important. And we've heard pretty clearly from banks that they want to have influence and control, but they don't want it to be bureaucratic. They want this thing to be able to run quickly because they feel the urgency of it helping them solve the industry problem.
I mean, the whole point is speed. So
Exactly.
why slow it down with more of that? I'm curious also about any sort of exclusivity terms. Are members prohibited from participating in competing network or future sort of similar?
They're not, but the question we often get from banks is, hey, tell us about how you're going to become interoperable, who you're going to come interoperable with. So we're actively engaging in a number of those conversations because right now you have proliferation of what I would describe as small networks being established, right? Public, private. Mm-hmm. Eventually, for everybody to be able to benefit from this, they have to mesh together. And so that's core to our strategy in terms of building out the network.
So am I hearing that you want to be like the ultimate mesher?
It wouldn't be a bad place to be.
It seems very desperate, right? Which also seems really inefficient.
It does. And again, I go back to who we are as a company. I view us above most as being the most neutral, out there. We're fortunate to have the technology. We see a big need in the industry and hoping we can help solve it.
Well, is there a bigger developer story here? That, could a fintech company, separate one, build on top of Project Keystone? Is this purely institutional, member only?
Yeah, so back to my use case comments, the reality is we will not be able to solve all of those use cases. So we envision this absolutely to be open for the developer community. A lot of the utility that this technology offers for clients requires last mile development because there's complexity and nuance to it. And we absolutely think that there's fintechs out there today or those that will come to bear that are going to be best suited to solve those problems. And we want to make sure they have the infrastructure to be able to build on.
And it seems like in the full stack of what you offer would be a nice sort of flywheel for clients that haven't been part of your business to be a part of it. Is that?
You think you're thinking about it in the right way.
Okay.
Yeah.
All right. Good to know. We talked at the beginning a little bit about the regulatory backdrop. I am curious if you've had conversations with regulators. Take us into some of those.
Yeah, so I can't disclose specifically,
Sure.
Who and what, but we're actively engaged with the regulatory community and with folks in Washington as well as regulators in the UK and the EU. I think we're getting to a place where we have a good sense of what might become law here out of clarity. I think that should create some urgency on the part of banks because frankly it largely is not bank favorable. Outside of that, what the Genius Act did is it created a clear framework that says, hey, tokenized deposits, here's what they are, how they're treated, down the fairway, go. So we're not really searching for clarity around tokenized deposits. It's defined, which I think is beneficial for the industry.
The Genius Act specifically, is it more of a green light, yellow light?
Yeah, I view it as it's a green light specifically on tokenized deposits, and I think clarity cements a new entrance into the ecosystem. There's been a lot of new bank charters that have been applied for and approved, and so this is a space that's fast evolving. Goes back to some of the banks saying, please move faster, because we need an answer.
Why do you think the regulatory environment has shifted in this way more positively towards innovation?
I view this as a continuation of the fintech story we've seen play out for the past 20 years. A lot of that focus, though, has been more on the application and experience layers. So where fintechs are challenging the status quo for banks and how financial services are delivered and created, et cetera. This is the same story, but they're going after the inefficient infrastructure that underpins banking today. So it's a continuation of that.
I think it's curious that, from my perspective, regulatory changes come much, much later than innovation.
Yep.
In this particular case, it actually seems like it's not too far behind. Is that the right observation that I'm making here?
The
lag is less.
No, I absolutely get what you're saying, and I agree. And I think that speaks to the urgency because of how transformational it can be on the industry, and so need to move quickly to be able to create that clear regulatory framework for everybody to operate.
Is there any type of change that needs to happen on capital requirements, how they're calculated, or how regulators assess liquidity risk now with more tokenized network changes?
On the tokenized deposit front, we have clarity in terms of the treatment, and basically, hey, a deposit is a deposit regardless if it changes its form, becomes a digital version of it. So that has been clarified. There's some obvious, this is back to the advantages of a tokenized deposit versus stablecoin. There's advantages for tokenized deposits because the risk profile is viewed as being different. And
more or less
risky because it's bank deposit. It is usually on a private permissioned network versus a public chain. The liquidity aspect of it, because one is held in bank deposits, others is held in treasuries. So there's multiple reasons why I view FIS as having more of a neutral position here, other than we want to make sure banks are treated fairly in this outcome, but we just want to be there to be able to, however it shakes out, enable them at the end of the day.
What are some of the open questions around risk specifically? I know you're having these conversations with regulators, some that come to mind. Maybe there's more interconnected points of failure. Maybe now there's more surface area, right, that's more systemic. How are you thinking about the risks that are still open that need to be solved?
Yes, you're hitting on a number of them in the questions that we get. So the benefit of a tokenized deposits and a tokenized deposit network is it is a privately permissioned network. So inherently, the surface area is less. It's viewed as a little bit, or as being safer. The other benefit is we've been in the business of building bank-grade technology, and that has transferred into this platform. And so I think that has some inherent benefits as well. But as I said, we're early. So the topic of interoperability, a lot of discussion about it. It's still being built out, and it inherently will have some risks that come with it that need to be discovered, mitigated, et cetera. We expect that.
I guess if you grow this big enough, maybe the answer to the first question around scale changes just slightly. Just forward looking here, something I think about a lot on Macro Talk is how jobs change as innovation changes. From where you sit, whose job changes as a result of Project Keystone?
I'll answer this in a couple of different ways. I think if you think about AI and agentic commerce, I think these things have to travel in tandem. So as agentic commerce becomes more real, it's a lot of machine-to-machine activity, requires programmability within the payment. Stablecoin and tokenized deposits offer that. I think outside of that and just the business that we do today, a lot of the efficiencies accrue around reconciliation of data. There's going to be some use cases where you're dependent upon an intermediary to perform some tasks where in the future it's a logic that travels with the payment and that intermediary won't be necessary anymore. So I think a lot of those type of functions today, they're not going to disappear. They're going to shrink, I think, over time. It's not too dissimilar to what everyone expects from an overall AI perspective.
And maybe this is projecting way, way far into the future. How do you see the economy changing potentially if Project Keystone expands scales, pace, size that you would love it to see?
Yeah, I think velocity goes up dramatically.
Velocity of?
Payments. I think we're going to see far more payments being made. You're going to see the economy truly transition into a more 24/7, smaller payments being made and a lot more. And so I think it'll be a net good thing from a speed, safety, soundness, efficiency perspective.
Do you see any jobs that don't exist today that could be created as a result of more payments?
Getting back to use cases, and a lot of the conversations we're having is we're reimagining existing processes and products that can be done better. I see a world once we truly start to understand the benefit of the technology and programmability, it's going to open up new use cases, new business models, new companies, frankly. I fully expect that to happen.
Do you have any sense of what, I'm just trying to get some ideas to start new companies and new jobs. So in that world, can you give us some examples of what those companies might look like or those jobs might look like?
Yeah, I think as more stuff gets put on chain and tokenized, you're going to see efficiencies accrue, new business models created as a result of it. So you may see commercial lending or syndicated lending change in form in terms of how it's ultimately delivered and taken to permanent markets, as an example.
There was a really bad movie that Justin Timberlake was in a long time ago, and I'm pretty sure it was called like In Time. And one of the premises of that film was sci-fi, was that you got paid sort of immediately. And so as you're talking about velocity of payment, something that comes to mind is this terrible movie, but also just that there are some ways people can get paid faster now, right? You've got lots of platforms that offer, based on a fee, to get your direct deposit sooner, or if you're an hourly worker, to get paid today versus in 2 weeks. Do you see a future where this leads to that kind of scenario where you could get paid instantaneously? As I'm sitting here, let's say, as you know, I mean, if we were live streaming, it would be like a different sort of thing.
Yeah.
But even for workers, is that sort of something that you're thinking about?
Yeah, so I'll share this stat with you, and depending on whom I'm talking to, it either excites them or scares the hell out of them. So, these transactions can settle in sub-millisecond time with finality. So, I mean, it is very quick.
Yeah.
And so to people who think about use cases of, oh my gosh, the efficiency and how many, I can pay people instantly, like, great. Then you talk to, risk and fraud people like, oh my God, like that's not good. We get,
Right.
that could be bad, and it's a bit scary. But I think that goes back to where we started in the conversation. What we've heard clearly from customers of banks is they need it delivered by a trusted source. And I think banks have been doing it, for years and years and years. And I think they'll continue to do that.
What do you wish more people knew about how money moves and works?
It is, on a personal level, like how complex it actually is, all the, the infrastructure behind the scenes. Till you're kind of behind the curtain and you see the complexity, it's hard for you to appreciate all the challenges that banks have and being able to serve their customers as a banker. And even today in this role, it's always a wish of mine.
Is there anything else that we haven't talked about today that has been on your mind? I'm sure there's a lot on your mind,
Yes.
But in terms of the future of how money moves, how it's embedded in this project specifically?
No, I think, the true market success here for Project Keystone and this technology in general is going to be us getting to a ubiquitous asset in terms of a tokenized deposit, and one that our customer delights in terms of a client experience. They don't know about it, they don't feel it, it just happens.
And what do you think makes FIS the organization that can make that work when many other initiatives and aspirations in this field have failed?
I think we're uniquely positioned based on who we are and who we've been serving to understand our banks and their customers in a way that gives us the right to build and deliver that technology.
Awesome. Jon, thank you so much for sitting down with me.
Yes, thank you for having me.